What is going on YouTube? It's Sank. We are back with another one. Now, as I always say to you, there's no such thing as a boring day in these markets. You guys saw how yesterday we got the smackdown from the market. Tons of the plays came down. The very next day, you saw the bounce back. Tons of greed now in the portfolio. Now, to let you guys know, that is going to be a reoccurring theme over the next couple of quarters, and we're just going to use this to our advantage because we know the market's going to pull back, so you can get in, make good entry, and that bounce back is just round the corner. So that's easy money, guys. We're going to stay active in these markets. Now, since we hit the midweek point, coming at you guys with a play that will double up, so there's tons of opportunity for you to make money on the play. All you got to do is just stick to that blueprint. So as always, in this one I've got an action-packed one for you, so make sure that you guys run the likes on this one for me. Now, before we kick things off, turn up the heat and jump into the play that will double up. I'm going to give you guys some coverage on a play that I've put you guys in recently. So we've got ticker symbol NUE, that's Nucor. I'm going to give you guys some intel on this one as we're fast approaching that $100 mark. And this is a play that you guys would have picked up under $90 just a couple of sessions back. So you're already winning on this one. Now, even though the market is rough right now, it's volatile, still going to find you guys winning plays to make money, as I say, regardless of what the market is doing. Now, this was one where we were buying in momentum. We were buying high and selling even higher. So I want you guys to know, even though there's a ton of plays that are down in the market right now, doesn't mean they're all ripe for picking up. You got to get a handle over the valuation. That's why I say we were able to pick this one up as they were hovering around all-time highs. They made even higher highs. Now, this is a play run very well. That's why I got you into them. But also, the still market is very lucrative. The pendulum is still swinging in their favor. And because of the supply and demand dynamics, I'm expecting it to do so as we continue through the third quarter. Now, that being said, let's talk exit strategy on this one. Looking for an additional 10% move upwards to around that $110 mark. At that point in time, we'll either make a clean exit on the play or at least set your stop limits or trailing stop losses of 5% below, so you can walk away with another W, okay? Now, those of you who didn't get into the play, this isn't a buy. We've got a hold rating on this one. We're focusing on exit on this play. Now, if you didn't get into this one, I've got another one for you to make entry on. Alright guys, so the play that I've got for you that will double up, that's ticker symbol GRWG, that is Grow Generation. Now, this was one of your plays to buy on Monday when this one was sitting sub $40, around that high 30 mark. So hopefully you guys managed to pick this one up because they've been on the move. Now, if you check out the charts on this one, you can see why I say ease into these plays. This is one that over the last couple of months has been bouncing around that channel at the high end of $55, at the low end in the mid 30s, around the $34 mark. Now, I've been easing into the play every single time I catch this one under $40. Now sitting on almost 200 shares in this one, getting ready for the run up in the play. Now on the day, they're just showcasing a little bit of what they're about, throwing up 5-6 points. And this is because, check this out, they're making another acquisition that caught my attention. Not only is it going to add 6 stores to their existing portfolio, it takes it up to that 65 store mark, which was originally their end of 2021 target. So to hit that number mid-year, you already know management is blowing through expectations, firing on all cylinders. Now, what does this mean for us as investors? So check this out. At $42, guys, this is a price tag that we saw back in December. Now, that means the market has disregarded everything they've done to this point. So you can rest assured that you're now sitting on a play, a gold mine of a play at that, because they are double the business they was back in December, double the revenues, double the store count. So when it comes to in the run up to earnings that we are going to be seeing over the next couple of weeks, mid-August, you already know it's going to be a blowout earnings performance on the day. And that could be a catalyst to move this one upwards. So that's why the move is to continue to ease into this play at good entry. Speaking of which, if we check out the charts, we already know the low end of the channel is that $35 mark. That's only when the market gets really severe, touches that mark, then often bounces back. So you start making entry at $40 and below. Continue to build and accumulate your position in this one. It's an undercover gem in the market that has the opportunity to double your money. What you guys are going to do is just stick to that blueprint. Under $40, as I say, continue to buy into this play. We are going to be celebrating some major success on this one. Alright guys, so that's the play I've got for this one and the moves to make with. Alright guys, so given it was a heavy hitting week for earnings for the mega cap tech plays, I want to circle back with you guys and let you know how we take full advantage of them as investors in our portfolios. Because when it comes to plays like a Facebook and Apple, Google, Microsoft, you guys got to realize we are talking with some of the most, if not the most prestigious plays on the entire market. They're sitting on tons of cash. They can hire the best people, funnel that into R&D to ensure they stay at the top of the game. They've got great brands. They've got best-in-class products. This just gives them a long runway of future growth. So to make sure that you guys are in on the action. You've already seen they've all obliterated earnings this season, just showcasing what they are about. So a reminder that these are top tier plays. Now the way you guys go about, as I say, taking advantage of them is to dollar cost average. No point waiting for a dip in these prices. You're going to miss out on returns. So just make sure you guys are getting on the action, setting regular schedules, whether that's every week, every 2 weeks, every month. Just ensure you are buying into these plays on a consistent basis. That way, you're getting the best cost basis over time. Now, there will be pullbacks. Every 18 months or so, these plays tend to pull back, but because you're dollar cost averaging and because you always have cash on the sidelines, you can go in heavy. You can accelerate your buying when these plays come down. That's the way to handle business when it comes to these mega cap tech plays. They're an addition to everybody's portfolio, so just make sure that you guys get in on the action. So if you've been rocking with the channel, you know what time is. Do you suggest those ETFs that I put on your radar yesterday over a whole SP500 ETF like a VUSA? So to wrap this one up, I'm going to share some of you guys. Now, this is a great question. It's in response to the 2 ETFs I dropped on your radar. In the last one, I gave you a consumer discretionary one and a financials one. Now, first up, some of you guys have mentioned saying you can't find those specific ETFs. Now, what you should do is find a similar ETF that mirrors those two, okay? So you can find a consumer discretionary one that takes a broad market view as well as a financials, and that will have you covered. Now, when it comes to the SP500 ETF, I've already told you guys, this is a great addition to any portfolio. It's going to be your preservation of wealth. And I told you guys how you handle that. Similar to how you handle the mega cap tech plays. You want a dollar cost average. Makes sense given how much these tech plays take up in the SP500 anyway. So it's the same strategy for the two. So now to your question, those 2 ETFs versus the SP500 ETF. Now, I don't want you to be thinking about as one versus the other. You should actually be looking at it as complementary. Let me tell you why. SP500 is great, but when you're just blindly shoveling money into it, you are not understanding what is going on layers beneath. Let me give you an example. We've seen over the last year cyclical outperform, like the energy oil industry, like the steel industry, that has caused an outperformance in the SP500 way above the normal average that it produces. Okay, so that's why I want you guys to have an awareness of other ETFs and an understanding of them and market trends, so you can use that to your advantage. By just shoveling money blindly into SP500 ETF, you are not improving your knowledge. And as I say, knowledge is wealth, okay? And you can use this to your advantage to create money in the market, okay? So the idea is to have your SP500 ETF working in the background, okay? It's an engine for your overall portfolio. But there's an opportunity for you guys to make outsized returns by moving into industries, ETFs that are going to perform very, very well over a given period. So you can bring fresh capital to your portfolio, get into those ETFs, as I say, and you'll perform very well in doing so. So that wraps up for this one. If you have any questions for me, drop them down below and I'll get back to you. Once I appreciate you guys. On your way out, light up that comment section for me. If you're new, join the movement, and I'll catch you in the next one.